All right, what's going on, guys? Today we're going to review the portfolio. We're going to try to quickly get through this video. Excuse me. Right now, the portfolio is up $27,633. Today was a very good day. $242 gain, 0.88%. After hours, I'm up only a buck. So we're going to quickly take a look at some stats here. For the past 3 months, I am up 2%, $716. For the past year, I'm only up 4%, $1,155. Not bad. I definitely would take that. And my all-time is $2,969 for a 12% gain. So that's actually pretty good. That's pretty incredible to see that the portfolio is, doing very well. And we're going to quickly take a look at what I've been buying. Nothing too serious, but like I said, we're going to quickly go to the video here. Apple, $224, a very, very strong day for Apple. It was up 2% today, closer to 2.50, almost 3%. So yeah, Apple's really bullish today. If you had Apple calls, you're looking pretty good right now. And the after hours, they're doing very well. Apple moved the market today, so the market was it was green. The Dow Jones was doing very well, and these big companies like Apple, Apple, Amazon, Google, Microsoft, when they do well, the market tends to do well. Shares 10, average cost 179, and I am up 24% on this stock, so I'm really crushing it here. $445. Portfolio diversity 8%. A really, really good stock. They're not on sale right now, but Apple obviously is a long-term holding. Even Buffett himself, he has like millions of shares of Apple. It's a decent stock. Not much to say about them. They moved the market today, and they had a very, very strong day. So one thing I will say is that I'm definitely looking forward to adding some more Apple if it ever gets back down to my average cost. And looking at my average cost, it could be better. I think Apple during the December correction, it dipped all the way down to about $149. So definitely could have picked up some more shares there. I wish I would have done that. But again, I think that average cost is not terrible, but I definitely could. I want to buy much lower than $179. So Apple looking pretty strong here. Actually, you know what? Somebody said it in the previous video that I could just scroll over here. So that's what I'm going to do. Simon Property Group, 155. At my shares average cost 154.84, 10 shares. I'm up $8 on the Simon Property Group. They have a really very nice dividend. That's not incorrect. I don't think that dividend yield is accurate. I think their dividend yield is closer to 5.88, but actually a 5% dividend. A dividend yield for Simon Property Group, and they have a really strong portfolio. I know they have not been doing very well here in the past year. They're down 11%, so that is a correction. And for the past 5 years, they're still not doing well. They're down 5%, but they have a very, very strong portfolio. Their balance sheet is very clean. Nothing too amazing, but they have tons of free cash flow going on, and I think that the dividend that they pay is very, very safe. I switched them out for IRM, Iron Mountain, and like I said, I just have more faith in the Simon Property Group's portfolio more than Iron Mountain. Iron Mountain is a business that's going to. I mean, it's a decent stock if you can buy them on the discount. But Iron Mountain's business model is what concerns me the most. So Johnson & Johnson, 129.38. Very good here to see that we've been buying more shares of Johnson & Johnson. We have picked up some more shares. I think in the last video, I had 15 shares. Now we have 23 shares. Average cost 129.22. You guys know that I wanted to buy this stock around $120, but unfortunately, It didn't go that low. Right now, they're not doing well for this past year. A lot of stocks aren't doing well this past year because a lot of these graphs are starting to hit that October correction. So that's when the market was actually tanking a bit here. Past 5 years, they actually been doing very well, 21%. This is a dividend king. This is one of those stocks that you keep buying and you just keep loading up the shares. And I know a lot of you guys, I've been watching you guys' videos, and some of you guys are talking about buying like 100 shares of Johnson & Johnson. Some of you guys are just loading up, and this is a good time to load up because, it's at a very, very respectable price. I said that I did buy Johnson & Johnson a bit high, and a couple of videos ago, I think it was average cost was around 139, but I think fair value around 125. It's sort of around that 125, 120 mark. That's very, very, very fair value, and below $130, I think that's still a good buy. 3M 164.40, so $164.40. They have been going back down. This is a dividend king, but again, it's very sensitive to political news. My total return is $29, so I'm still holding 3M. Average cost at $161.50 for 10 shares and $1,654. So but it's a portfolio diversity of 5%. Nothing too special with 3M. Again, they've been affected by the trading war. They've been affected by a lot of the politics that's been going on, and it's a stock that's having a massive correction here. That is actually a bear market. 22% down for the past year, and for the past 5 years, we're still seeing very good growth of 16%. So this is another one of those stocks that you really just buy and hold because they have a proven track record of increasing their dividend for as far back as I can remember. So AbbVie is doing very well here, $75.45. They have recently been getting upgraded by several analysis. I've been getting upgraded a lot by these firms, these banking firms, and I still am holding on here at shares 50 at an average cost of $65.73. So a portfolio diversity has actually went up because I've been holding for quite a while here. 13% and an equity of closer to $4,000. Absolutely incredible. And the total return is absolutely ridiculous, $486. So AbbVie has been doing very well here, not in the after hours, but you guys know that they recently joined a company. I think it's what's the company called? Allergan. I think I'm not sure if I'm pronouncing it right, but they merged with a company, or they bought a company, Allergan, and that increased their debt load. So a lot of investors are concerned about the debt with this company. If you obviously with their upcoming balance sheet, their debt is going to be tremendous because they took on that company, they bought that company, or bought out that company. But this gives them some more diversification because they were too much dependent on Humira, and that's a drug that's one of their more popular drugs on the market. It's doing very well, but they depended too much on that drug, so they wanted to diversify a little bit, and they have a very, very good, strong dividend yield. I still believe that the dividend yield is quite safe with this company, and it's a very, very high dividend yield, which is the reason why this portfolio continues to generate $100 each and every single month. So Shell Company, $59.90. They started off really flat in the morning, but they kind of recovered here. Average cost is still $55.55. When shares 50 and the equity is closer to $3,000. Total return $217. So this is another one of those blue chippy solid dividend stocks that pay pretty good dividends, and I think this is a $47 dividend. So it's pretty good to see that Shell is starting to rebound here. They had a massive correction. I took advantage of that, and I started buying when it was at at all-time lows. So. Well, not all-time lows, but I think they did hit a 52-week low. $54.64 was their low. So interesting to see there. Altria, $40.90. They had a very good day, but this stock, again, is being affected by political news. A lot of my stocks seem to be affected by politics. They seem to be affected by just news in general. If the market is doing bad, then these stocks are the ones that people take money out of a lot. So Altria has been just getting absolutely crushed here. They're down. That is officially a crash. It's down $19.44. Yeah, this is pretty bad. Down 7% for the past month. And yeah, average cost $40.29. I'm up $30, but I'm still down because you guys know I bought like around $43 or so, and I moved that money around and I just bought back into Altria because I had no idea it was going to hit $39. I'm pretty sure people were buying up that dip there when it hit not $50. When it hit $39, I can't really tell from this graph, but it definitely did hit $39, and investors just swooped on in and just picked up shares. They recently increased their dividend yield, so Well, they increased the dividend itself. That tells me that a company is doing okay, is doing better than advertised. Obviously they would not increase their dividend if they were doing bad. I just don't see why they would do that, but they have recently increased the dividend, and again, this is the time to be buying, I guess, because Altria is on sale. AT&T $37.90. Average cost 35.06. 50 shares 142. I'm up pretty big on a lot of these stocks. AT&T dividend aristocrat. I just needed a stock that follows the streaming news. I was looking at Disney the other day, and Disney is not doing well. The streaming competition is getting a little fierce. Roku's doing stuff. Apple is starting to excite investors with their streaming. Disney, obviously Disney Plus, you have Amazon Twitch. There's too much streaming going on, and the competition is getting big. So I think that's the reason why Disney is not really doing well here. There's a lot of competition, and each time a company that some people recognize say, hey, we're gonna have streaming for streaming at a discount, a lot of investors sell off they sell off the losers and they buy the winners. They say, oh, Roku's having streaming service for like I don't know, $2. Let me buy Roku. So that's the reason why I think Disney's not been doing well. For the past 3 months, they are down 7%. So in the past month, they're down 5%. So Disney's starting to get interesting here. I said that if it gets back down to 130, I will consider them, and I have been considering them. They actually went as low as 129. Definitely looking at them. So, but anyway, let's go back to the portfolio. We had AT&T. I talked about them. New residential investment 1573. It looks like it looks like they just went back up a little bit. I don't know there. 200 shares, average cost 14.24. It's average, the portfolio diversity 11%. So this stock has been sort of rebounding here. If you've been buying that dip that I was talking about, then you're probably looking pretty good right now. They have an ex-dividend day coming up, so I'm going to be getting paid, at least for the amount of shares that I have, $100 quarterly. That's pretty good for this company. But again, it has its risk with that high dividend yield. Obviously you have to do due diligence. You have to look at the balance sheet and see if that dividend yield is safe. Obviously, I've been buying a lot of this company, and I have complete trust that they can maintain that dividend. They've actually been increasing their dividend, which is quite surprising considering how the dividend yield is so high. So again, guys, this is a risky company, but it looks like so far this investment is paying off. I'm up close to $300 in capital appreciation along with new residential investment. Power shares S&P 500 high dividend low volatility ETF. This is the last. I believe this is the last stock in the portfolio. This is actually ETF. $42.63. Average cost $38. Total return is absolutely ridiculous of $471. 125 shares. I'm looking to buy more. I want to buy more, and I want to continue to buy until I'm satisfied. So hey guys. 500 shares, why not? How about 1,000 shares of SPHD? How would that look? How much does that pay per month? Absolutely ridiculous. You guys know that I've been getting that dividend, and actually it got paid today. So $19 was paid today to the portfolio, and it will continue to pay every single month. So, I got the dividend the dividend from last month. It was just $19.11. And this month I got $19 again. So I will continue to be getting paid each and every single month. And this is another one of those strange ETFs that have been increasing their dividend. So I believe that is it for the portfolio, guys. There's some Bitcoin down here. I buy some Bitcoin? I think I did buy some Bitcoin, and then I took the money out because I needed to buy some shares of Johnson & Johnson. I didn't go crazy with it. I bought like $50 worth of Bitcoin at around 816, I think, somewhere around there. So yeah, 8,000. Well, wow. Hold on here. Oh, so I sold. Because I needed to take the money out and buy some more Johnson & Johnson. So I actually lost about 19 cents. Yep, 19 cents. So unfortunately, but I am watching Bitcoin because it has been tanking, and if it gets back down to that 3,000 mark, I might consider them. This graph is, there we go. Yeah, look at how much Bitcoin was. Bitcoin was like 19,000. Jesus. And then it went all the way down to 3,000. That's the reason why Bitcoin is so scary, because it could go down massively, guys. But yeah, I've been watching them. Nothing too serious, but just have them on my watch list. I already have a separate watch list of stocks that from Seeking Alpha that you guys know about. So anyway, that's it for the portfolio, guys. It's a quick video, 27,000 now. So but maybe by the end of the year we can get this up to 30,000. And I guess a goal for me would probably get this portfolio to 100,000. Like, how would that look? $100,000 of just dividend stocks paying dividends, and right now we're sitting at well over $100 each and every single month. So, just with this combination alone, I want to try to get my spreadsheet out, my Excel spreadsheet that I've been working on. I when I'm at work, I kind of like have a side project where I'm working on my Excel spreadsheet, so you guys can see like the dividends just rolling in, like who pays what, and all that other stuff. But we're gonna see. I did invest. Put in $1,000 to buy some more Johnson & Johnson. IRM dividend is coming up, $30 there. So that's going to be good. MO dividend there. And then you guys know that new residential investment is going to pay $100. So that's well over $100, guys. The portfolio is doing very well. And I guess the target goal would be $100,000. Maybe 50. Let's be realistic and say 50,000. Let's get the 50,000 first, and then we'll worry about $100,000 later. But again, that's it for the video. I hope you guys had a great trading day, and I'll see you guys next time.